Great. Yeah, a lot. Thanks for having me. A lot of data out this week that's like Christmas for economists, right? And I think ultimately the bottom line is the economy is slowing, but still remains relatively resilient. The inflation rate, yes, it's slowing. We're seeing positive developments, but it has been sticky to the downside. And we anticipate that to be the case, especially by the end of the year. So ultimately, how this translates into Fed policy, I think we're going to see one more hike by the Fed in May, and then they're going to spend some time to assess the impact of the tighter financial conditions, past tightening, and take a pause for quite some time, at least until the end of the year, at least based on our base case scenario.
Okay, so how do you weigh that out against what we're seeing in other economies across the globe right now? Singapore, Canada, Australia, India, Philippines, just to name a few, where you've seen central banks go on pause this week or last.
Yeah, I mean, we're definitely starting to see global central banks pause. Keep in mind, a lot of those central banks did start a bit before the Fed did. So you could just argue, hey, the Fed's maybe 1 or 2 meetings behind. So the fact that the Fed would stop in May, which again is our base case scenario, would imply that the pause is sort of, you're seeing this rolling pause across the board, again, based on the order in which people started their tightening policies. And for the most part, our analysis has found that that's actually equities tend to like that. They like that pause coming forward. But usually we tend to be really happy in markets whenever the majority of the central banks are in easing mode. And that's really where the difference lies, is we're not to that point yet. And we're not even close.
Alejandra, rate hikes historically take a while to work their way through the python. And I mean, when's the last time we had 75 basis point hikes, 3 of them in a row to worry about? So at what point do we really feel the full effect of those? And are the regional bank earnings that we're going to get over the next couple of weeks really going to give us a sense of that tightening credit to add to that color? Or are they just going to work so hard to assure everybody that they've got things under control?
No, it's a great question. Now, one thing to keep in mind is, yes, the Fed has hiked quite aggressively, but it's coming from very, very low levels. And when you adjust it for real rates, so take away the inflation portion, actually the rates aren't quite as high. So things aren't quite as hawkish as maybe people thought. And then in terms of the impact, I think we've already started seeing it. We've seen sort of a rolling impact. I mean, clearly last year we saw it in residential real estate. We're seeing it in office, commercial real estate right now. Within households, it may take a little longer because of the tight labor market and starting from a high cushion of savings. But yeah, I mean, over time, we are going to see more impact from the Fed. And, again, to the point that I mentioned earlier, yes, the Fed is likely to hike in May, but they're likely to pause for quite some time.
Alejandra,
our base case. Oh,